The world of cryptocurrency, once a wild west of digital innovation, is now facing the scrutiny of the United States Securities and Exchange Commission. The SEC's role is to protect investors and ensure fair markets, a mission that has become increasingly complex with the rise of cryptocurrencies like Bitcoin and Ethereum. As more investors pour money into this burgeoning asset class, the SEC's involvement has become inevitable, leading to a complex dance between fostering innovation and enforcing regulations. The SEC's interest in cryptocurrency stems from its potential to be classified as a security, subjecting it to the same rules and regulations as traditional stocks and bonds. This classification, however, is not always clear-cut, as the decentralized and technologically complex nature of cryptocurrencies often blurs the lines. Proponents of a hands-off approach argue that excessive regulation stifles innovation, potentially hindering the growth of a transformative technology. On the other hand, those who welcome the SEC's presence argue that regulation is necessary to protect investors from fraud and manipulation. The decisions made by the SEC in the coming years will have a profound impact on the future of cryptocurrency, shaping the landscape for investors and innovators alike. The SEC's lawsuit against Coinbase, one of the largest cryptocurrency exchanges, sent shockwaves through the industry. The SEC alleged that Coinbase was operating as an unregistered securities broker, allowing users to buy and sell crypto assets that should have been registered with the agency. At the heart of the Coinbase case was the question of whether certain cryptocurrencies should be classified as securities. The SEC argued that many cryptocurrencies, including those offered on Coinbase, met the criteria for securities under the Howey test. Coinbase vehemently denied the SEC's allegations, maintaining that it had always operated within the bounds of the law. The SEC's lawsuit against Coinbase had a chilling effect on the crypto industry, with exchanges fearing they too could become targets of enforcement actions. This uncertainty led some companies to scale back their operations or relocate to more crypto-friendly jurisdictions. The outcome of the Coinbase case was being closely watched by industry participants and investors alike, as it had the potential to reshape the regulatory landscape for years to come. The regulatory landscape shifted dramatically with the re-election of Donald Trump and the appointment of Paul Atkins as the new chair of the SEC. Trump, known for his pro-business stance, had signaled during his campaign that he favored a lighter regulatory touch on the burgeoning cryptocurrency industry. Atkins, a former SEC commissioner with a reputation for being industry-friendly, was seen as a key ally in Trump's vision for a more innovation-friendly regulatory environment. Atkins's appointment sent a clear message to the crypto industry. The SEC, under the Trump administration, would be taking a more measured approach to regulation. Under Atkins's guidance, the SEC shifted away from its previous strategy of pursuing high-profile enforcement actions against crypto companies. Instead, the agency adopted a more collaborative approach, engaging in dialogue with industry leaders and seeking to provide regulatory clarity through guidance and education. This shift in tone was welcomed by many in the crypto industry, who had long complained that the SEC's approach was too heavy-handed and created unnecessary uncertainty. The SEC's decision to close its investigation into Robinhood's crypto operations without taking enforcement action further signaled the agency's changing stance under Atkins's leadership. Robinhood, a popular trading app known for its commission-free stock and cryptocurrency trading, had been under investigation for its handling of customer orders and its compliance with securities laws. The SEC's decision to drop the investigation suggested that the agency was willing to give crypto companies more leeway as long as they demonstrated a good faith effort to comply with regulations. The closure of the Robinhood investigation had a ripple effect throughout the crypto industry, boosting confidence among companies operating in the space. Legal experts speculated that the SEC's more lenient approach could extend to other ongoing cases, including the high-profile lawsuit against Ripple Labs regarding XRP. The SEC had alleged that Ripple had conducted an unregistered securities offering by selling XRP tokens to investors. The outcome of the Ripple case remained uncertain, but the SEC's changing stance under Atkins suggested that a settlement might be more likely than a protracted legal battle. A settlement in favor of Ripple could have significant implications for the classification of other cryptocurrencies, potentially paving the way for greater regulatory clarity and market stability. The evolving regulatory landscape for cryptocurrency presents both challenges and opportunities for investors. While the SEC's more accommodative approach under Atkins's leadership may have reduced some uncertainty, the regulatory future of cryptocurrency remains far from settled. Navigating this complex and ever-changing environment requires investors to stay informed, exercise caution, and adopt a long-term perspective. One of the most important things investors can do is to stay abreast of regulatory developments. The SEC's website, industry publications, and reputable crypto news sources are valuable resources for tracking regulatory changes and understanding their potential impact. Diversification remains a key principle of sound investing, even in the volatile world of cryptocurrency. Investors should avoid putting all their eggs in one basket and instead spread their risk across multiple cryptocurrencies and other asset classes. Despite the regulatory uncertainty, the long-term potential of cryptocurrency remains compelling, with blockchain technology poised to revolutionize various industries.